Precious metals, ETF, what they are and how they work. What are precious metals, ETF? Precious metals exchange-traded funds hold assets like gold, silver, and platinum and sell shares in their portfolios. Those who invest in a precious metals ETF are exposed to the price changes of these metals without having to own and physically hold them. Investors typically have several reasons for putting a part of their portfolio into precious metals ETF. If you're new to our channel, then subscribe and stay connected with us by like, comment, and share this video. Gold and its counterparts can provide a hedge against inflation and economic uncertainty, and their low correlation with assets like stocks and bonds makes precious metals ETF a means of further diversifying a portfolio. They are also relatively convenient and liquid, especially compared with transporting, securing, and holding the metals yourself. However, like other investments, precious metals ETFs have risks. They fluctuate with often volatile metals prices, and the funds may not accurately track the performance of their assets. How precious metals ETF work. Let's review what's similar about all ETF, including those involved in precious metals, before going into the specific differences encountered by precious metals ETF investors. Like other ETF, these funds are pools of capital that hold assets and trade on the major stock exchanges. The sponsor, this firm devises, promotes, and manages the ETF. However, the sponsor doesn't create ETF shares. Market makers, companies that work with the ETF sponsor and the stock exchange on which it'll be sold to ensure a consistent supply and demand of the ETF shares. They have set rules for trading spreads and the minimum amount of investment they'll give prices for. They essentially guarantee that there's liquidity for each ETF shares. Authorized participants, all ETF, have creation and redemption processes involving large financial firms, traditionally major banks like Bank of America or J.P. Chase, and company. The authorized participants create ETF shares by buying the underlying asset and exchanging it for shares in the fund. Authorized participants can then sell these shares to investors on the market. Conversely, authorized participants can buy ETF shares from investors and redeem them for the underlying assets. Only authorized participants and not regular investors can create or redeem shares by depositing or withdrawing the precious metal or other assets related to these commodities. The price of the shares is then determined by the net asset value of the metals and other assets divided by the number of shares to be sold. The assignment of these firms is to ensure that shares in the ETF mirror the assets they're tracking. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.